Hello, everyone, and welcome to Inside the Vault. I'm your host, Mark Yaxley. Today, our guest is renowned author and speculator Lobo Tiggre. Lobo has spent the last 15 years researching and recommending speculative resource opportunities. Between 2004 and 2018, he wrote for Casey Research publications under the pen name Louis James. During his time with Casey Research, the publications boasted an impressive record of 18.5% average yearly gains. Lobo now publishes his own newsletter focused on resource opportunities called The Independent Speculator. Lobo, welcome and thank you for joining us today inside the vault.
Happy to be with you, Mark.
Great. I read in your bio that you've traveled over 1 million miles by plane, horse, mule, and foot to conduct your due diligence on mining operations. You've seen a lot of places and a lot of things, I'm sure. Can you tell us about one place or memory that stands out in particular?
There's so many. One of these days I will write a book about some of my adventures with illegal miners in Colombia or other places. Africa, obviously a lot of just such different cultures and amazing things. But I have to say, if I have to pick one, the most jaw-dropping place that I've been to has consistently been China. And, there's a lot we could say about that, but just it is so impressive to go and see some, mud brick thatch hut village and go back just a couple years later and see, steel frame windows and satellite dishes on the roof. And the pace of change there is truly mind-boggling. And the work ethic of the average Chinese person is just a powerful force. And there's, 1.5 billion of them or whatever there are today. This is a big deal, and I think it is not an exaggeration when you hear people talk about how important China will be going forward in this century.
In your opinion, do you think the average American or even Canadian is taking that situation a little bit too lightly?
I think most people have no idea. Sorry, that may sound arrogant, but I really don't think most people comprehend. It is hard to comprehend if you haven't seen it. A skyscraper as big as anything in New York or Toronto goes up in a year, just from nothing to there it is, boom, you go back the next time. This huge modern building there, right? The so-called Yankee can-do attitude of times past has turned into a we'll sue you attitude now. They don't I mean, heck, just like I get on an airplane and it's time to go and the people are still, being disrespectful of other people's time, as often happens over there. They're puttering around, putting their stuff away. The airplane starts pulling back. If you aren't sitting down in your seat with your seatbelt on, that's your problem. They're not worried about getting sued. It's time to go, so we're going. Or another place, and this isn't necessarily all positive, by the way. I'm not saying I'd like to live there, and sorry, but I certainly wouldn't like to work for a company run by the Chinese. People are a dime a dozen over there, and the way you treat employees is reflective of that fact. I'm not saying it's all great. I'm just saying it's important. And the final story I was going to tell you is there's one place where there's going to see a mining project. And we drive by this old ruin. It looks like just a wall, this long fortification, many, many years gone past. I said, what's that? There's no sign, there's no marker, there's no historic, brown sign on the side of the road or tourist center. It's just this thing off on the side with horses and stuff wandering around in the Gobi Desert, South Gobi Desert. And the guy driving says, oh, that was an old fortification left behind by Genghis Khan. I'm like, you're kidding. That sounds pretty historic. I've never heard of it. There's no sign. And we drive by and we get to the corner and the Chinese had bulldozed a corridor right through this old fortification and put a power line through it. It's like a historic monument from some Mongolians. We don't care. You're in the way of progress. And boom, they just went right through it with this power line. Can you imagine that happening in the US or Europe or Canada or really almost anywhere else?
I cannot. Maybe a sign of the times, though. Like you said, it's a very progressive society in terms of their work ethic and what they're trying to build and accomplish. It's a perfect transition into my part of my next question. We're living in very interesting times right now. You have a president who's potentially going to be impeached. You've got an ongoing trade war with China. you've got an economy that seems to be booming. At least that's what the reports say, that unemployment's at a 50-year low, and you've got the Fed that's cutting rates. I just want to ask you, what do you make of all this?
Well, the perfect Chinese response would be to remind you of the ancient curse, may you live in interesting times. We certainly live in interesting times. Though my Chinese friends tell me that that's really only half the curse. The other half is, and come to the attention of important people. So that makes sense to me. If you really wish someone ill, that's exactly what you would want. You know, an IRS audit comes to mind. But there's so many. We could spend an hour on any one of the 5 parts to your question there. Let me just frame it broadly and say, clearly the world is in tumultuous times. And clearly that is supportive of safe haven assets. So there are a lot of directions we can go from this, but one very clear direction is this is all very supportive of precious metals. And I know you have questions about that later, but I think it's just real quick. It's very striking that despite all the good news, bad news, ups and downs that we've seen, that gold has found a lot of support in the mid-1400s, and it has not gone back to that 1300 prison that it was in for 6 years. Mm-hmm. And to me, that's reflective of all the things you just said, right? The world is the kind of place where people are concerned, and you know, some hedging of your bets with the world's longest standing safe haven asset makes perfect sense in that world.
Mm-hmm. Yeah, I agree with you. And I was speaking to Jeff Clark not too long ago, and he said it's interesting, and it supports exactly what you said, is that we've broken out of that 1300 range. We're now at that 1500 range, high 1400s, and really none of the major triggers or major events have taken place. It's just the underlying support. The central banks are buying because they see the risk. The ETFs are buying because obviously there's a sense of risk even on the institutional side of things. I'm just waiting for Main Street investors to show up to the party and push this thing over 1500. But we'll come back to the gold price in a little bit. In your opinion, you know, obviously there are a lot of different things that investors can be looking at right now, different indicators. What are some of the things that you look at, different indicators that have got your attention right now that you might encourage more novice investors to focus on?
Well, again, one size doesn't fit all. There's so many things I could say. Given your line of business, I guess focusing on the precious metals, I do think that, as confusing as it may seem, and as often as it looks like gold doesn't do what we expect it to do, it's important to remember that most of the trading, the actual trading of dollars versus gold back and forth that happens, that determines the spot price, is not you or me buying gold to put in a vault somewhere, or mom and pop going down to the local coin shop and buying a few eagles, you know, to stash away. That's, at the end of the day, that's important, but on a moment-to-moment basis, it's these paper traders in New York that are setting the tone, and secondarily, the guys in London. And they're keying into global economic trends and factors, and particularly the price of the dollar. So as much as we want to say that things, you know, this should matter, that should matter, you know, really the dollar is if not the number one factor, it is a number one factor. Gold's priced in dollars. Mm-hmm. It often trades in high correlation to other commodities. Dollars up, gold's down. We see that all the time. But that's basically viewing gold as a commodity, which these guys in New York, which so often, you know, set the price, and the guys in London as well, that's viewing it as a commodity. So what's going on with the dollar and all the things we could talk about, that absolutely important during the times when gold as commodity is how it's trading. But that flips, as you and your audience I'm sure knows. There's times when fear grips the markets and the safe haven trade takes over from the commodity trade, and then you could see gold and the dollar going up at the same time. Mm-hmm. Right? That's both can be seen as flight to safety. And that probably will continue until confidence in the dollar is shaken. And oddly enough, we may also see a high correlation of gold and general equities, the safe haven asset of gold, with the risk-on attitude of, yeah, let's buy Wall Street one more year. we could see that going forward because both are responding to the Fed's easy money policy. I would disagree a little bit with something in your question in that I do think there was a major shift in the marketplace in 2019 when the Powell pivot, right? That really did matter. And the Fed going from tightening to easing, it really did matter. And gold was up in 2019 as well as commodities, as well as stocks in general. Wall Street and gold were both up significantly in 2019. And I think a large part of that has to do with the Fed's about face and the easy money policy. And let's not forget, that now the talk is, rate cuts are on pause. Well, rate cuts are on pause, but that doesn't mean the easy money policy is going away. They're still buying, expanding the balance sheet. And even on the rate front, the real rate, you subtract out inflation, the real rate is negative. We have negative real rates in the United States, maybe not nominal like in Europe, but they're negative real rates. And that's very supportive for precious metals.
Excellent. Excellent. And so is it fair to say, in your opinion anyways, and most of the headlines out there, including some of the larger institutional players, have come out and said that they expect the gold price to continue rising through 2020. In your opinion, are you feeling optimistic about 2020, maybe similar results to what we saw in 2019 where gold's up 10-15% on the year?
I would say that's sort of a base case. And again, those guys in those big institutions are like the paper traders I was talking about in New York that set the spot price. They're looking at gold as a commodity and they're projecting their trends. And one of the things I'm sure they're looking at, a prime variable in their models, is the Fed's easy money policy, since that's not expected to change, right? Even though the latest dot plot and all that, it says that we may not get more rate cuts, not till 2021. It doesn't matter. The current policy is easy. It's easy money as is. And they're seeing that. And I think that's why you see some of these larger institutions, seeming to be getting on board with the long-suffering gold bugs out there. Don't kid yourself. They're not.
For different reasons, okay.
Right. They're just looking at this, according to what their models say. And the easy money policy is pro-gold.
So would the biggest risk to the precious metals space be an end to easy money? And until that happens, we could expect the prices to continue rising?
It could be, but there's potential trouble in the horizon. Let's not be Pollyanna here. If the type of easy money, there's different types of easy money, right? If they sent everybody a check, like some of the Democrats want to do, or there's a debt jubilee or something, right? That would be money printing of a more direct sort, and that would prompt consumers and people out there to go spend a lot more. And I think you'd see a lot more inflation, broadly speaking inflation, consumer good inflation as a result of that. The kind of easing that they're doing is directly affecting financial instruments. I think we have seen an enormous amount of inflation, but it's gone into equities and the kinds of things where quantitative easing directly impacts. So and in that space, it's possible that people could say, oh, Wall Street's doing great, it's risk on, therefore we don't need safe haven assets. So despite the fact that the easy money policy is fundamentally pro precious metals, on a day-to-day moment, we see this. We see days where Wall Street is up sharply and gold will sell off. But nothing else bad has happened, right? There's no bad news for gold. Rates haven't changed. It's happening as you and I speak today, Thursday. The stock market is up on a tweet, and gold is down. The tweet had nothing to do with gold. It's not anti-gold in any way.
What was the tweet? I missed the tweet. What was the tweet? What did you see?
The president said, "Oh, we're really close on a trade deal."
Oh, okay. He said that a couple of weeks ago too.
Well, yeah, like we've never heard that before. Dow hits a new record high based on this tweet that nobody's ever heard before. I mean, it's ridiculous. But there it is. And my interpretation of price movements, this is a very short-term volatility we're talking about here. But my interpretation is that stocks are way up, risk on, therefore we don't need safe haven assets. Or some paper traders are saying, oh, it's risk on, therefore less demand for safe havens, and gold drops. But I think that's very short-sighted, and we saw, again, over 2019, if you look at the whole year, that same policy, oh, it's risk on, easy money from the Fed, that was also good for gold. So I'm saying I'm not really worried about this, but you asked me what could derail the party here. And I think if there is a sustained view amongst these paper traders that set the spot price in New York, that it's risk on and we need less safe haven assets, you could see more pressure on gold at that time. And if it breaks down some technical support levels, I'm not a TA specialist myself, but that does have a self-fulfilling prophecy impact in the market, because a lot of people take that stuff very seriously, and sometimes with good reason. At any rate, so if you have this risk-on attitude in a sustained way, and that pushes gold down to where it breaks below certain technical support levels, and that triggers a cascade effect, you could see drop in gold prices that would be significant. And frankly, I think that'd be awesome. I think that'd be a great buying opportunity, because it would be in contradiction to the fundamentals.
Mm-hmm.
And I have a shopping list just waiting for that kind of possibility.
Great. I would like to just take a couple minutes and talk about different types of metals as well. We've been focusing a little bit on gold. I know that you cover a variety of different metals in the mining space. Where else should investors be paying attention to? Are there other opportunities that exist in the market right now, aside from the precious metals? And what are those opportunities?
Sure. It depends a little bit on the type of investor and so on, but as much as people may not want to hear this, I absolutely think one thing people owe it to themselves to look into is uranium, if they haven't already. Mm-hmm. I know that the uranium bulls have been saying for a long time that the fundamentals are very strong for uranium. You can't replace it. You can't put something else in your nuclear reactor. We need nuclear energy, even if the world is moving away from nuclear power. You can't just shut these things off all at once and so on. And so you got to have uranium. And the prices are too low. And all that stuff's been true for years. It's still true now, and it makes a very good argument. And I tend to be a fundamentalist investor. But it's been true for years. And I understand that a lot of people don't want to hear about uranium because it just hasn't gone anywhere. That having been said, it did actually bottom in 2016. And we have seen a series of higher highs and higher lows since then. Uranium has just put in, I guess, another much higher low, and has been trending up in the last few weeks. But the big thing right now that makes it particularly interesting is that Donald Trump, again, is in a position where he may be doing something to boost U.S. uranium production. The Department of Commerce recommended that to him last July. He didn't act. He formed a working group. They recommended that to him. We now have leaks if that's the case. And so there's a special opportunity in U.S. uranium plays. But even aside from that, this question of what will Trump do, I believe, has kept a lot of the U.S. uranium buyers, the utilities, off the market. Why would you contract with miners if you don't know what the rules are going to be? And so you would wait. And the U.S. is still one of the biggest consumers of uranium in the world. You've got a nuclear fleet of some 100 reactors. We're a big consumer. So if you have a big consumer not buying for a while, that's not good for uranium prices. And they've gone up despite that. So I think this is very interesting. There's a lot to be said about that. You can find lots of uranium stuff on my website. We won't get into that all today, but I do think it's something people should look into. And it's something potentially with a very near-term fuse. The other thing people are excited about are all these battery metals. Mm-hmm. And personally, I am very bullish on that. I do see the shift towards electric, not just in cars, but we've now got self-flying helicopters and all kinds of things coming down. And whether you believe it or not, in global warming, climate change, that is a push towards electric, which most of the world does believe, rightly or wrongly. That's what they want, and that's what they're going to get. And this is all very bullish for the metals required for the new energy paradigm. And I do see it as a paradigm shift. I think the days of burning fossil fuels for energy are numbered. And I think that change will happen faster than most people realize, especially going back to the beginning of our conversation, places like China making the shift, and they have a very urgent pollution problem that really is pushing them to do this. I read somewhere that they're adding on the order of 1,300 electric buses per week. And that each one of those takes like a ton of copper. Right? These kinds of changes are huge. All of that having been said, I am not rushing into battery metals plays right now because the global economy is cooling. I'm just saying this is on my radar. I think it's real, and I think particularly the metals are in short supply, which not all of them are. Not all battery metals are great speculations. But some are, and there's going to be a time where I'm going to move into those with gusto. But I'm I'm not doing that right now because the signs of the global economy cooling mean that even the ones that are in short supply could see prices retreat significantly over the year ahead. So that's farther down the road.
Lobo, obviously a lot more to cover. Like you said, we could talk hours about each one of these topics. I wanted to take a minute to introduce our viewers, our listeners, to your newsletter because you've got a lot of information, a lot of knowledge on not just gold and silver, but other metal opportunities that our investors might be interested in. Do you want to take a second, just tell us a little bit about the Independent Speculator, what you've built over the last 2 years, and what your readers go to you for?
Sure. Well, thank you very much for that question. The first thing I want to jump on, though, is yes, I started this newsletter in April of 2018. So it's a new service. It's my baby. I've gone independent, but I'm not new to the business. I did the same thing that I'm doing now for Doug Casey for almost 14 years at Casey Research, where your audience may remember me as Louis James, the pen name I wrote under.
I'm sure if you will. We interviewed Nick Giambruno recently, as well. So
yeah,
there's a crossover.
I do have a little bit of experience here, and I'm bringing that to bear for my new readers. So real quickly, I would encourage people to come to independentspeculator.com. There's a lot of, I think, high-quality free material, not just on metals and mining and commodities, but also trading practices, maybe more philosophical things about investment theses, what it means to be a speculator, what people need to be aware of in the world environment today, the kinds of things you and I have been speaking on. I publish something almost every day on the website, available for free. It's educational material. Obviously, I hope that my expertise persuades people to become paying customers, but that material I believe has value, and we do give it away as frequently as we can. We also have a sort of entry-level letter. It's called My Take, where it's very simple. There's no portfolio, there's no in-depth analysis. It's just quick summary analysis of stocks of interest to the audience. And that can be companies that are in the news for a big takeover or something, or they can send in requests. I do respond to reader requests, and I just boil all of my experience and my network's experience down to a take on, general thumbs up or thumbs down on stocks of interest. And then there's the Independent Speculator itself. That's my flagship publication. And the idea of that is that it's not just, oh, these are good ideas, or this is what's interesting today. It's that I'm only writing about speculations in there that I think are so great, I'm willing to put my own money into it. It's very much skin in the game is the central thesis of that letter. If you think that it's a conflict of interest for me to own what I write about, then you don't want the Independent Speculator, because I own them all. It's not just that I disclose that I may have a position. That's the whole idea of the letter, is this is what I'm doing with my own money. And therefore, I think it's worth your attention.
I like that. I like that a lot. Obviously, there is a lot of experience. You can tell just by speaking to you today, just a ton of knowledge there. I would encourage anyone to go up and at least check out the free newsletter and then maybe move on to the paid subscription afterwards. Your approach is going to resonate with people. A very personal approach. You told me earlier when we were chatting that you answer all the emails that you receive yourself, and that's great. I wish you the most success with your publication, and thank you for your time today, Lobo, and look forward to speaking to you again in the near future.